Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, May the 20th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data here in the States, but across the pond, we did get German PPI, which came in at 0.1% versus an expected 0.2%. Remember, PPI is Producer Price Index, so an inflationary gauge, if you will. And we also got Great Britain's industrial orders, and it came in at negative 8%, but was expected at negative 13%. So that was a little bit better than expected. In Canada, we got the core CPI, which is the Consumer Price Index, came in at 0.2% better than expected of the 0.1%. Core retail sales came in at negative 3%, but was expected a negative 4%, so a little bit better on that front. Canadian CPI, which is Consumer Price Index, which is the overall look, came in at 0.3%, and the retail sales came in at negative 1%, which was expected to be a negative 0.7%. So the overall retail sales came in at negative 1%. The core retail sales came in slightly better than expected at 0.3%. Today we had, in the United States, existing home sales come out better than expected at 5.45 million units versus the expected 5.4 million units. And we also have a Fed governor speaking today, which could add a little bit of volatility to the overall market. I haven't seen anything out of what he said, but it obviously wasn't too earth-shattering. Anyway, on to the markets. We got the crude oil right here, /CL, as you can see, just slightly in negative territory. The overall markets rallied up and tested that $49.70 some odd cents again. You know, the $50 psychological barrier, which is right there at that little low volume and low time node, which is really a resistance area. I talked about this several times. If we get it to settle up above that, the bulls will have control. If we don't make it up there, the bears still have control and could easily see it trade back down into the mid 40s. Onto the Nasdaq, as you can see here, pushing quite a bit higher on the day. The /NQ up 50 points, just making a pretty big rally today. The E-mini S&P following suit, up 13 points on the day. Just pushed straight out of the gates and started moving higher. If you look at the overall equities from a 15-minute chart, as you can see, overnight session really pushed higher, and as soon as the market opened, we got the day session underway. The market's just done nothing but rally. Just recently, we kind of pushed through the value area high here and settled just below it. As you can, just below it. So that would be an indication that the market is going to at least go down and test that point of control, which it looks like it did. It's kind of hard to see here. I initiated a short as soon as it looked like we were going to settle inside of there. So I sold the 2053s, and the market has come off. So I'm looking for it to at least come down here and test the overnight session area. So we'll have to see how that works out. Other than that, I haven't done a whole lot. Yesterday, I took off my SLV when I saw the market come down here. Now, if you can remember, quite a while ago, I came in and bought the June 15.5 puts, and I paid 39 cents for those, thinking that when the market gapped up here that we were going to look to kind of close that gap. Well, it took quite a bit of time, and the overall market theta decay really kind of ate into that. And once we came down and covered that gap on the gap down yesterday, I decided to cover that trade on those 15.5 puts, and I scratched them for 39 cents. But turned around and decided that was going to be a good opportunity to buy or get long SLV. So I bought some shares of SLV thinking we were going to come up and try and cover this gap. It looked like it this morning when we opened up that it was going to go up there, but the market's kind of slumped off since then, and we are right about where I initiated that trade. So, you know, it is what it is. I was hoping to get a little bit of a pop, and it was going to be kind of a quick trade, but I don't mind owning SLV at these levels. That's about all I got for you guys today. It's been pretty quiet, just getting ready for the webinar today, which is going to be on front call ratio spreads. We did one last week on the front put ratio spreads. This is going to be a neutral to slightly bullish market assumption, but we won't get hurt if the overall market comes off, and that is the beauty in this strategy. If we get a slight move up, then that will achieve our max profit, but if the market moves away from our strikes, then we get to keep that credit that we got for initiating that trade. So I'm going to go over all the details as to how to set that kind of strategy up. It's a really good one when there's a lot of high implied volatility in whatever underlying you're looking at. So it's a good one to stay tuned for. So that's all I got for you today. If you can't take that, take it easy.